Hello friends, welcome to Let's Shoot Accountancy. So we have already seen the basic concepts of consignment. We have seen journal entries, we have seen valuation of stock. We have also done 3 problem solves on the consignment accounting. In today's session, we are going to learn in consignment accounting where what will be the accounting effect if the goods are invoiced at above the cost. Now what is this? When consignor sends goods to consignee and consignee further sells the goods, it is quite possible that consignee knows the profit which is earned by the consignor, because when consignor sends the goods, if the cost of the goods is 100 and consignor sends the goods at 100 rupees to consignee and consignee sell those goods at 125, then consignee know that there is the profit of 25 rupees. So many a times it happens that consignor does not want to disclose the actual cost to the consignee, or consignor wants to hide his profit. If the consignee knows the profit, it is quite possible that consignee may enter into a competition in future with the consignor, and consignee directly purchase the goods from the other dealers and he himself sell the goods instead of on the agency basis. So to avoid this probable competition or to hide the profit, consignor might send the goods to consignee at a price which is higher than the cost price, which is known as invoice price. So what consignor does? Consignor add some extra profit to the cost and send the goods at the invoice price. Now for example, if the cost of goods to consignor is 100 rupees, consignor might add 20 rupees profit and sends the goods to consignee at 120 rupees. Now this invoice price is not a selling price yet, okay? It is just the price at which consignor transfer goods to the consignee. Now further consignor might tell consignee to sell those goods at 120 itself. So consignee will feel that he has received the goods at 120 because consignor has already added the profit of 20, and consignee is instructed to sell those goods at 120 itself. So consignee will not know how much profit is the consignor earning on this transaction, or consignor might say that this 120 worth of goods you have to sell at 150. So in that case, consignee feels that is a profit of 30 rupees, but instead consignor is earning a profit of 50 rupees because the cost was 100, invoice price was 120, but the further selling price was 150. So consignor is earning a profit of 50 rupees, but consignee feels that there is a profit of only 30 rupees. So for all this reason, consignor what does? At times consignor does not want consignee to know the cost of goods. So the consignor then invoices the goods at invoice price. And what is this invoice price? Consignor adds some profit element to the cost and invoice those goods to the consignee at this invoice price. Now one more important thing over here is this loading or this profit which is added by the consignor is unrealized profit. This is not yet earned by the consignor. This profit was charged when the goods are sent to consignee. When consignee actually sell those goods, that time that entire profit is earned by the consignor. So guys, this loading or this will be called as unrealized profit. This is just a profit which is charged by the consignor but not yet realized. Not realized till the goods are sold to the final customer, okay? Once the goods are sold to the final customer, that time we can say that this profit is realized profit. Now how will you deal with these transactions? First of all, we'll see the calculation of how to calculate this loading or invoice price. So for example, if the cost of goods is 1,20,000, goods are invoiced at 20% above the invoice price. So if you want to find out the invoice price, or if you want to find out the loading, how will you do? We say as cost plus loading is invoice price. Now what is this? This is 20% above the invoice price. Goods are invoiced at 20% above the invoice price. So if I assume invoice price as 100, then profit, that is loading, would be 20% above invoice price. So on invoice price it is 20%, so that is 20, then the cost would be 80. So guys, do remember, you assume 100 on which the profit is levied. So if it is 20% on cost, we assume cost as 100. If it is 20% on invoice price, you assume invoice price as 100 because that will give you a proper figure of loading, and the third one would be the balancing figure. Now in this case, cost of goods sold is goods sent is 1,20,000. So if this cost is 1,20,000, with the cross multiplication you can find out loading and invoice price. So you can just cross multiply. So that is 1,20,000 into 20 divided by 80. So your loading comes to 30,000 and your invoice price will come to 1,20,000 plus 30 you can do, that would be 150, or into 100, again cross multiply, divide by 80. So 1,50,000. Again one more example. If the goods are sent on consignment at 3 lakhs, that is at invoice price, and goods are invoiced at cost plus 25%. And in this case, this 3 lakhs is invoice price, and if you want to find out cost and loading, then how will you calculate? So guys, this is going to come in your questions. So this is just I would say a part of your question where you need to find out loading element. So if the question says this 3 lakhs is invoice price and loading is on cost, now what will you assume? 100. This is cost plus 25%. So you assume cost as 100 because on that you will get the round figure of profit 25, loading 25. So in this case your invoice price would be 125. Now this 3 lakhs is cost or invoice price? It is invoice price. If 3 lakhs is 125, then 25 is how much? 100 is how much? So just cross multiply 3 lakh into 25 divided by 125. So that is 60,000, and 3 lakhs into 100 divided by 125. So that would be 2,40,000. So like this you can find out the cost or the loading or the invoice price. Guys, this is required, that I'll explain you further why this is required, but you understood this. So first of all, you see, is the cost of goods is given or is the invoice price is given? Then profit is charged on invoice price or profit is charged on cost? Accordingly, first write the equation, then write the amount which is given over here, cost was given over here, invoice price was given, and the other figures would be found out by the cross multiplication. Now in consignment account, how will this be recorded? So this is your loading. Now when the goods are sent to consignment, sent on consignment to the consignee, it would be sent in this case at invoice price. That means when I say in consignment account debit to goods sent on consignment, we send pro forma invoice with the goods when we send the goods to the consignee. So in that pro forma invoice, if this is the case, whether we would have written 3 lakh rupees for the goods or 2,40,000? Yes, we would have written 3 lakhs because goods are sending on consignment at invoice price. So if this is the case, we write goods sent on consignment as invoice price. But now consignor knows that this is not the actual purchase cost. This invoice price has derived by adding the unrealized profit to it. So when you record goods sent at invoice price, at the same time you will reverse the loading on the same. So with the same account name by goods sent on consignment, and you will reverse the loading for the same. So if this is the scenario, your goods sent on consignment will come at 3 lakh rupees and your loading will come at 60,000 rupees. If this is the scenario, though the cost of goods was given as 120, but still you will record your goods sent on consignment at invoice price because it was sent at invoice price. So it was invoiced at invoice price. So you will write goods sent on consignment as 1,50,000 and your loading would be 30,000. Now this was not done in the previous problems where we have done 3 questions on that, because there the goods were sent at cost. But over here the goods are set at invoice price, first point. Second point, now you'll think instead of recording this at invoice price and this at loading, it is better to show it as cost. Agreed, because net effect is cost. Now invoice price minus loading will give you cost. So I agree your point, but when you check with the pro forma invoice, now when you do accounting, you have a supporting documents for that accounting, and for this goods sent, the supporting document is the pro forma invoice. Pro forma invoice is the rough invoice. It is similar to invoice which is sent by consignor to consignee, giving details of all the goods. So when you verify with the pro forma invoice, if this is the scenario, the amount which would be written on pro forma invoice would be 3 lakhs. And if you write goods sent on consignment as 2 lakh 40, you are not doing the accounting entry as per your pro forma invoice. So in that case, with the physical document, or we say documentary evidence, with the physical document, you record your goods sent on consignment as 3 lakh itself, because goods are invoiced as 3 lakh rupees. Okay, so goods are invoiced at 3 lakhs. So you write this as 3 lakhs, and then you reverse the loading, because this is in your books. This consignment account is prepared in the books of consignor. So consignee does not know this loading element and everything. So this is done in the books of consignor, where we record the transaction at invoice price, since the goods are invoiced at invoice price. But since the net profit is to be transferred to P&L, and if you don't reverse the loading, then this would give you a wrong net profit figure. So that is why we reverse the loading element to find out the net purchase cost of this goods. So guys, you understood this. Now what other transactions on which the loading is to be done? All those transactions where it is recorded at invoice price and there is an unrealized profit, you need to reverse that. So now this was goods sent, this is as good as purchases. One more is your opening stock. So that actually comes above this. For opening stock, we write as to stock on consignment. This is your opening stock. Now for this opening stock also, since we record this, because the stock, this opening stock is lying with the consignee. So with the consignee, it is lying at invoice price. So this would be also at invoice price. So for this invoice price, again we will reverse the loading. But for the opening and closing stock, we open a new account called as stock reserve account, because that would carry forward. Like your opening stock account gets carry forward, your stock account gets carry forward at invoice price. So against which I will have to record a loading account to net off that effect. So that account is called as stock reserve account. So I would say by stock reserve account, this is loading on opening stock. Now when the goods are sent, it is possible that goods could be reversed or returned by the consignee. So if goods are returned by the consignee to consignor, it will come on the credit side by goods sent on consignment account. And this I will write as return, the goods which are returned, and on which you will again reverse the loading. Now goods would be returned by the consignee at invoice price itself, because he has received goods at invoice price. So this would be also at invoice price. So you reverse the loading and it will be recorded in the same account, because do you remember that goods sent on consignment accounts balance goes to where? It goes to trading or purchases account. So if I am transferring goods sent on consignment balance to trading purchases, it should be a correct figure at cost. So if it is at invoice price, it will be reversed in the same account at loading. Goods sent on consignment account, and this would be loading on return. Next, there can be abnormal loss. Now, abnormal loss can be in transit when the goods are going from consignor to consignee, or it can be in the go down of the consignee when the goods has reached to the consignee. So when the goods have received by the consignee or goods are sent, it is sent at invoice price. So any loss which we will calculate from this goods sent will be at invoice price itself. But the profit which I have not earned, how can I say that I have lost that profit? Okay, so on this also we will reverse the loading in the same account to abnormal loss account, loading on the same. Okay, and lastly, closing stock. Now, when the goods are sold by the consignee, you do not reverse loading on that, because on sales we realize the profit. This is actually unrealized profit. Profit is not earned, but still consignor is charging some profit, some loading on the cost to find out the invoice price. But when the goods are actually sold by the consignee, that is your realized profit. So never reverse loading on the sales, because that is a realized profit. Okay. And lastly, closing stock. So for closing stock, we write as by stock on consignment account. This closing becomes next year's opening, and this is last year's closing, which is current year's opening. So for stock, we open account as stock on consignment account. This is my closing stock. And for closing stock, we will reverse loading. Now again, closing stock would be part of goods sent, so that would be also at invoice price. So for reversing its loading, we write as to stock reserve account. This is loading on closing stock. So now if you see, this stock reserve account which is on the closing stock, which is carry forward, will be carry forward and will become next year's opening stocks reserve and would be credited. So if you see over here, this is the opening stock which would be last year's closing stock, and this stock reserve which would be last year's stock reserve on closing stock, which is brought forward in the current year and it is adjusted against the opening stock. So this cycle goes on. Now this closing stock will become next year's opening stock, and this stock reserve will also get carry forward and will become next year's opening stock reserve. So guys, you understood this consignment account? So it is very simple. What you have to do, you have to record all your goods transaction except for the sales, because sales is realized, okay? Realized profit. So you have to record all your goods transaction, goods sent, opening stock, goods sent, goods returned, abnormal loss and closing stock. All these 5 transactions you have to record at invoice price if it is given in the question. So like the previous sums where there was no invoice price mentioned, so we don't record at invoice price, we record at cost itself. There was no loading concept. But if it is given in the question that it is sent at loading, some profit has been charged by the consignor, so in that case, that 5 things, opening, goods sent, goods returned, abnormal loss and closing stock, recorded invoice price, and on the opposite side, on the reverse side, you reverse that loading amount. Simple. So you have to do only 5 things extra. This entry, anyways you pass this blue thing, so on that you have to just reverse the loading. Now I'll just quickly go through the entries, because they might ask you journal entry question, so you must know the entries. Now you can make the entries easily from this account, but logically we'll go. Now first of all, opening stock. What is the entry for opening stock? Consignment account gets debited. So guys, this all 5 entries we have discussed in our journal entries, okay? So these are the normal basic entry. I'm just writing this for the loading purpose. And now when you record this entry, you will record at invoice price when the goods are invoiced at invoice price, okay? So consignment account debit 2. For opening stock we write as to stock on consignment account, and for that the loading entry would be, if this is consignment debit, so it will come on the reverse side, so consignment credit, and opening stock loading goes to stock reserve account. So stock reserve account debit to consignment account. Guys, this is your this entry. Stock reserve account debit to consignment account is credited. Next, goods sent on consignment. Now you must know this basic entries, we have done this many times. Consignment account debit to goods sent on consignment account. If you are still confused, you can refer to the basic journal entries video and then you see this entries video. It will be more clear. And for this loading, if this is consignment debit, so loading would be credited to consignment account. So to consignment account, and for this goods sent on consignment we debit the same account, because that then the balance in the goods sent on consignment account will come at cost, no? So this is invoice price credit, this would be loading debit, so net cost will come in goods sent on consignment account, and balance of goods sent on consignment account is transferred to trading or purchases account. Goods sent on consignment account debit. Next, goods returned by the consignee. If this is the goods sent entry, return entry would be reverse. So we are receiving goods back, so goods sent on consignment debit what comes in to consignment account. It is as good as your purchase return. So when there is a purchase, we debit the consignment account, and purchase return we generally deduct, but here you cannot deduct, no? So that is why you credit the consignment account. And the loading entry would be, yes, here the consignment is credit, so consignment will get debited. Consignment account debit to goods sent on consignment account. Next, abnormal loss account. So goods are going on, loss will get debited. So abnormal loss account debit all losses to consignment account, and loading on the same. If consignment is credit, so then consignment would be debited to abnormal loss account. Again, abnormal loss is recorded in invoice price, but if 100 rupees is the cost and 120 is the invoice price, and if one quantity is lost, we cannot say we have a loss of 120 because the cost of the goods was 100 rupees. So against this 120, I will reverse the loading of 20 rupees. So consignment to abnormal loss account 20. So net in abnormal loss account and consignment account, your 100 rupees will be reflected. And last, closing stock entry is, what would be the entry? closing stock. So consignment account credited, stock on consignment account debit to consignment account, and loading on the same. If consignment is credited, so for loading consignment will debit with the loading amount, consignment account debit. 2. For opening and closing stock, we open a new account called stock reserve account, because this reserve will get set off against the stock which is at invoice price, and net cost would be reflected. Now this I have already explained, that stock on consignment, second effect goes to stock on consignment account, which is shown in your asset side in the balance sheet. Do remember that these basic entries, if this is a loading concept, this basic entry you have to pass at invoice price, and all the further amounts of the loading, so these entry you have to pass with the loading amounts. You know that you don't have to pass entry with the cost. Automatic the net effect will reflect the cost. So guys, you understood this loading concept, and further sessions we are going to solve the problems based on this loading concept. Okay, thank you.